Hi, nice to meet you again. So today I'm going to talk about the consolidation accountings because recently, so NTT acquired NTT Docomo. NTT is one of the biggest telecommunication company in Japan, and NTT Docomo is the mobile phone operator in Japan. So that's why today I want to learn with you about the consolidation accountings. But today, so I have the guests, the special guests. So let me introduce Fan Fui. Yes, please. So please introduce yourself.
Hello everyone, my name is Fan Hui. I'm from China and I'm working with Morhui-san.
Yes.
So today we're gonna do this video together.
Mm-hmm.
Hope you like it.
Thank you. So this is today's agenda. And firstly, let me explain what is a consolidations. Okay. So we are working with many companies. Okay, NTT Docomo, and other companies also. This is one group. So NTT is the parent companies, and under the parent companies, NTT Docomo, and other companies and subsidiaries. Okay, so this is the pictures, and each companies create the individual financial statement. Okay, in this slide, so we have the 4 individual financial statement, but so as one united group, so we need to create a consolidated financial statement, and this one should be reported to the stakeholders to show about the financial position and the operating result as the united groups. So this is the concept of the consolidations. Okay, one phase. So now I have one question to you.
Yes.
So what is the financial statements? So we ran financial statement in previous sessions. So do you have any ideas? Financial statement, please.
Okay, as far as I know, financial statements can contain 3 types.
Okay.
First, balance sheet, an income statement, and the cash flow. But I remember you have a video about the detail about financial statements, right?
Yes.
Please access here.
Yeah. Thank you for your
previous
quotations. Thank you very much. Okay. So next is this is a very important concept. So this one should be understood by you. Okay. So to create the consolidation financial statement, we have the 2 steps. The first step is the sum up, and the next step is the eliminations. The first step, sum up. So we have the 4 individual financial statement we have, right? So just sum up, just summarize each individual financial statement. And next step is eliminations. So because we have the intercompany transactions between the parent, between parent to the subsidiary, between subsidiary to subsidiaries. So these intercompany transactions should be eliminated. So the 2 steps. So here you can see we have the 4 types of the eliminations. But today let me focus on the number 2 and the number 3. Revenue, COGS eliminations, and AP and AR elimination today. Let me focus. So the next is the scope of the consolidations. Okay, here you can see the decision tree to decide that this company is in scope of consolidation or not. The first question to you, that company is subsidiary or not? Okay, so to answer these questions, so you need to understand the voting rights concept. Okay, and if you have the more than 50% of the voting rights, so this company is automatically recognized as the subsidiaries. Okay, but this is not subsidiaries out of scope of consolidations. This is the first step. And next steps, so we need to confirm the subsidiaries have the materiality or not. If this company has a materiality in scope the consolidations. Okay, so do you have any questions so far, Fan Fui?
Okay, one question. I wonder how do you define this monetary or not?
Okay, so thank you for your questions. So materiality is the impact. So we need to think about the impact of the amount of the revenue or profit or other like assets. So impact to the parent company to the group, if you have the dominant, the big amount, if this subsidiary is a big amount of the revenue, blah blah, so this subsidiary have the materialities, and then you should include the part of the consolidations. Is that clear for you?
I think so. I guess maybe you should consult with your auditor
Yes,
to
yes,
define
for
if
details.
it's my subsidiary or not, right? Okay.
Yes.
Thank you.
Thank you very much. So here the next one is number 4, eliminations. So this is the main topics today. So let me. It's your turn, Humphrey. So eliminations. So please explain. Please make it easier. Okay. Thank you very much. Please go ahead.
Okay. Just as Morris-san introduced, after you sum up all the financial statements from your subsidiary companies, you should do the elimination to eliminate all the intercompany transactions. To make it easier to understand, let's make a easy example.
Yes.
So I am the parent company, and you are
Subsidiaries.
company.
Okay.
So first, I purchase some products, like this box of tissue,
Okay.
from my vendor. Okay, I purchased for $20,000
Okay.
and then after I purchased it, I sold it to my subsidiary company
Okay.
for, of course, I'm gonna earn some profit. So
Yes.
for $24.
24th.
Okay,
Okay.
here you go.
So I will buy this box from parent 24,000. So that's why I need to recognize account payable 24,000 to you. Okay. Yeah.
And
And
then my subsidiary company sold the product to their
Customers. Yes, customers. So again, so I need to recognize the profit. So that's why 24,000 purchase and then $30,000 to sell it to the customers. Yes.
So here, the intercompany transaction is this $24,000 between me and my subsidiary company.
Yes.
This transaction should be eliminated from the final financial
Yes.
statements, right?
Yes.
So
Yes. Yes.
as you can see in the slides, the AP, AR, which AP is for him, for my subsidiary company, AP to me, and my AR towards the subsidiary
Yes,
company
yes.
should be eliminated.
Yes.
And also the COGS,
Yeah.
COGS,
COGS and sales.
and the sales should be eliminated.
Okay.
So please see the next slide.
Okay.
Here, how do we do this?
Yeah.
It's very easy, just
Yeah.
to make a reverse entry. So APAR reverse and COGS and sales reverse. Just as simple as that.
Yes.
Make this entry as your elimination entry, and the entry will be eliminated from the final report.
Yes.
So what happened? Do you think if we eliminated this entry, something will like the result will be changed? Of course, the answer is no. So here is the sum up before elimination and after. So before sum up,
Yes.
I earned we are like separated. I earned $4,000 from by sell the product to
Yes.
my subsidiary
Yes.
company,
Yes.
and the subsidiary company
Yeah.
sold
6,000. I have the
earned $6,000
gross
USD.
profit. Yes.
Yeah, by selling to their customer. So now we are a group because we are from the same company.
One legal entity, right?
The group earned 4,000 plus 6,000.
6,000. Yes.
Yes, you can see after the elimination, only the final sales are on the price of 30,000 and the purchase
Yes.
for 20,000
20,000.
left.
Yes. Yeah.
So which give us the final profit as
Yeah.
10,000.
Yeah. 10,000. Yes.
So which is exactly equals to before. So
Yes.
4,000 plus 6,000 equals 10,000. So the result, the profit of the whole company has not changed.
Makes sense.
So is that
Okay.
clear?
Yeah.
Do you have any question?
Yeah. Thank you very much. I understand. Yeah. So, but I have one question before closing these sessions. So, because we have the many subsidiaries, and so the subsidiary is located in the different countries all over the world. Okay, for example, parent company is located in US, subsidiaries in Singapore, China, Japan, Germany. So in that case, so each subsidiaries have the each own local currencies, Euro, JPY, right? US dollars.
Yeah,
So
true.
how can we consolidate with the local currencies? This is my question to you.
Here, next slide. Okay, of course, only the big company has their subsidiary company all over the world.
Yes.
So me, as the parent company,
Yeah.
for example, I have USD, and you, from Japan, you
Okay.
have the JPY.
JPY, Japanese yen.
Of course, the consolidation report is submitted as a parent
Yes.
company, so should all describe in my currency. So the
Yeah.
parent company's currency, which
Yes.
is USD.
Yes.
So all my companies,
Yes.
subsidiary companies, should convert
Convert.
their local currency
USD.
to parent,
Yeah.
Currency,
JPY
which
to
is-
USD. Euro to
Yeah.
USD.
just like this. So I got all the individual finance in my country's currency and submit to the government.
Okay. Thank you very much. I understand. So and then let me add the one thing. So here's individual financial statement. So for example, the German companies created their own individual financial statement with euro. So that's why this euro financial statement should be reported or declared to the German local government, something like this. So that's the procedures. Okay. So that's all for the today lessons, today learnings. So here the next topics, next lesson. So thank you for joining the today session, Fanfree.
Thank you for inviting me.
Yeah, thank you very much. See you next time. Bye.
Bye.